Hello, everybody. I thought with everything that's going on at the moment with gold and silver, uranium, and the cryptocurrencies, it might be useful just to show you some of the charting techniques that I've been using. I know not everybody who follows me on Twitter is really very familiar with how these charting techniques work. So what I'll do, I'll just I think probably start with a miner, a gold miner. And in fact, if I just delete everything that's on the chart here and make it blank, and try and talk you through just how I'm analysing these charts and some of the techniques that I use. So I've already identified through some of the things that I've shown on Twitter, some of the charts I've put on there, that we're in a what I would call a cyclical gold and silver precious metals bull market. And the reasons for that are all shown on the gold and silver big picture charts that are on my Twitter feed, and also the post that I put on yesterday that kind of gives you a history of how this has been building up, really. Some people will ask what the value is of doing technical analysis and how can it be any use. There's a lot of manipulation going on with gold and silver, and how can drawing a few lines on a chart possibly help you to know what's going to happen next week, next month, next year. So if you're sort of scratching your head and trying to work that one out, then I'd recommend you look at the pinned tweet on my Twitter page and just try and get a little bit of an idea as to how it's worked over the last 3 or 4 years, which it has done. I mean, it has worked very well in the technical analysis that I've been sort of doing over the last 3 or 4 years has, for me anyway, been really helpful in knowing where we're going, what direction we're heading in with these particular markets, commodities markets. So here's a chart for KEFI gold and copper traded on the London Stock Exchange. And what you can see is that as the gold and silver bull market reached its bull market low, it was around about sort of late 2015, early 2016, this stock sort of bottomed and then began to rise. But then since then, it's carried on dropping further. And there are individual reasons why a stock might move in a different direction to the underlying markets, gold and silver markets. In fact, it's interesting to note that silver also made a nominal new low in September of this year. Sorry, not September. What am I talking about? March of this year, as this chart did. So gold has been sort of gaining ground since the cyclical low, but silver sort of rose and then popped down, and copper has recently started to move up as well. So this particular mining company specialising in gold and copper is really now starting to see some upside potential with gold prices, which have risen, well, nearly doubled since their lows in early 2016, and silver obviously trading at more than twice its bear market low as well, or around about twice its bear market low. So how would you start analysing this? You're looking for support and resistance levels, and support levels are found by drawing either horizontal or angled lines that support the price. So looking at this particular chart, what strikes me is that there's probably a support line in here, which there is by the looks of it. So that is one support line. Price comes down. This has been a support line for sort of 9 years now. Price bounced off it again, bounced off it again, and the same down here. So this line is supporting the price. There's also a significant level. I'll draw this as a zone of support, which I sometimes do, because lines can be a little bit misleading sometimes when you draw straight lines on. But there's a zone of support where price sort of bottomed there, and it's a sort of a support and resistance level. In fact, I'll take it right the way across. So what you can see is that price came down and then bounced out of that zone. And it came down here, and there was some sort of price reaction in that zone before it eventually fell through it, but then tried to reclaim that zone and move back through it. Obviously that failed, but you can see that this sort of red bar that I put across here is acting like a magnet. It attracted price before it could break free, and then as price plunged through it, it attracted the price back up again before it fell away. So what that means is that we're likely to see this magnet drawing price upwards now that we're in an uptrend. And talking about uptrends, there's a trend line to be drawn in here. Okay, so you can see that price is being supported by that sort of trend line. And in fact, there's an upper trend line here as well that goes all the way down, I think. Something like. The reason I'm moving this line around is to try and get a positioning where it touches as many candles as possible up here. That's what gives the line its sort of confirmation and its validity. So there we have a sort of declining, expanding wedge, which when it breaks out will be very, very bullish, not least because it's been a chart formation that's been in a downtrend for 9 or 10 years. So we're getting close to that point where price is looking like it's going to challenge for a breakout. And when that happens, I think we'll move quite rapidly back up to the sort of zone between 8 and sort of 12 or $13. Obviously starting at around $2, well, less than $2. That's a really good solid gain. You'd expect some volatility or some hesitancy around that price level before stock price, as the bull market sort of continues, the stock price will continue to move upwards. If I change the time view along the bottom here, this is using TradingView. You'll notice on the top it's tradingview.com. So if I change the view to the 5-year view, it sort of zooms in a little bit more and adjusts the stochastic indicator to that sort of 5-yearly time frame, and it gives much more sort of useful shorter time frame sort of analysis. And what you can see from this is that the stochastic has bottomed in this white zone where you typically see the indicator sort of moving up and taking price with it. Difficulty here, of course, is that we've been in a bear trend all these years. So every time the stochastic indicator turns up, you only get a small rise in the price before the stochastic indicator turns down, and you get a long, steady decline. That's what happens in bear markets, is that when the indicator turns up, yes, you get an uptick in the price, but it's small and short-lived. But when the same thing happens in a bull market, you get an uptick in the stochastic indicator, you get a large rise in price. And when the indicator turns down, you get a small drop. So in a bear market, the indicator turning up tells you that price is going to go up a little bit and then down a lot. In a bull market, it tells you the price is going to go up a lot and then down a little bit. That's how bull and bear markets work. So we've established, or I'm suggesting, that this is a major multi-year low in the stock price for KEFI gold and copper, based on the fact that gold is in a well-established bull market and copper is now, well, has now broken out and is also in an ongoing bull market. So the stock has a lot of catching up to do, and investors are just realizing that. That's the fundamental reason why it's going up. The technical reason why it's going up is because we've got this support line which is guiding price all the way up, and every time price hits the support line, it bounces off. So that's confirming the fundamentals of this stock. Okay, slightly adjust that a little bit upwards. So what can we expect? Zoom in a little bit more, and I think what you can see here is that we've got, in fact, I'll just draw it for you. Okay, so we've got and I'll change those lines to make them stand out a little bit. I try and do this when I post my charts as well, to just try and make it clear for you what it is I'm trying to highlight. In this case, it's a flag. Flag patterns are nearly always bullish, You have to watch the support and resistance line on a flag, of course, just like any other chart pattern, because on a small number of occasions, the flag will break down and it'll go on to form a different chart pattern. If this was to break down now, it'll be forming a different scenario and a different chart pattern. But whilst this flag holds and whilst the support and resistance lines all around it hold in place, it is what it is, and what it is a bull flag. So, and you'll have seen these on my charts quite frequently. They're a very common bullish consolidation pattern. Price goes up and it moves away from the moving average, it moves away from the supporting trend line, and then it gradually retraces back to the supporting line. Then it'll move up again rapidly as investors realize what's happening, and then it comes back down, and you get this sort of stair-step pattern, which is very typical in ongoing bull markets. One way of sort of estimating the next price target, or the way of estimating the next price target with a bull flag, is to measure the height of the flagpole. So the flagpole here starts at around about, call it 56 cents, and it goes up to, I try to just, for simple mathematics, round the numbers up or down just to keep the maths simple. So we'll call that, although it's not, we'll call that $2.56. So it starts at 56 and it goes up to roughly $2.56. That's a $2 move. It's a little bit more because that's actually $2.65. But we're going to call that a $2 move. So being cautious, because we know it's actually a little bit more than a $2 move, we can expect a $2 move to the upside, and it's $2 measured from the breakout. So the breakout, if I just circle it for you, is going to be in this area here. And that will take a midpoint on that line. It's $2. So $2 plus $2 takes you to $4. So just adjust this. The reason the line looks shorter is because it's a log chart. That's a $2 move from the bottom of the flagpole to the top, and this is also a $2 move from the breakout to the tip of the arrow on that flag, on the arrow there. So that's $4, and it's a shorter line because we're using a logarithmic price scale. Price is accelerating more rapidly with the same distance. So from here to here, that distance is equivalent from $4.25 to $5. The distance is the same as it is from 56 cents to 65 cents. So it's a logarithmic chart. So on the breakout, what we can say is that the next target will be around about $4. I usually use a similar sort of angle of ascent because there's no particular reason to expect it's going to go up vertically. There's no particular reason to expect it's just going to go up, following that line. The price does tend to sort of get away from that line. That's why it sort of resets back down onto that line. So if we were to go up to $4 in that area there at a similar angle of ascent to the previous rise here, we'd be talking about sometime, I don't know, anytime from February to sort of March time, when we'd be getting to $4. So that's a 100% price increase between now and, well, let's say in the next sort of 8 to 12 weeks. Of course, these things can explode to the upside and move extremely rapidly, and if that happens, then great, that's all good. But I'm just going to be sort of cautious here and assume that, or work on the assumption or the expectation that we'll then have another pullback before we move upwards again. Depending on what the markets are doing at the time, you can, of course, have a much longer pullback that can go on for months, like the one that we've just seen. This has gone on for at least 4 months now, 4 or 5 months. So it's possible, of course, that price could accelerate away up here, and you get a much more significant pullback, something like that, if the trend line is going to carry on being respected. You could get a pullback from $6 to $4. That's a 30% drop, something like that. But that's all speculation. All we need to know at the moment is that the stochastic indicator has just had a bullish cross. The stochastic indicator is get my words out. It's a momentum indicator, and we've had a bullish cross because the blue line has just crossed over the orange line. You might not be able to see that, so I'll try and zoom in on it for you. Now you can see that the blue line there has crossed over the orange line, which has given a bullish signal, like it did down here. See how the blue line crossed back over the orange line, and boom, the way it went, the price went up from 50 cents to, well, it had that $2 move that I was talking about. And the same thing's happening now. Can it turn back down again? Well, yes, it can. There's nothing in the rule book that says just because it's crossed over, it can't cross back over in the other direction and come back down. So we could see price coming back down and testing the support line somewhere in the $1.65 sort of area, $1.66, whatever, somewhere around there. So you have to bear that in mind. But what we're doing here is we're weighing up the risk and reward. What I mean by that is that, what's the downside risk? Well, the stochastic indicator is already very low. So it means that it's moved from all the way up here to all the way down here, and price has retraced from $2. Well, it actually spiked all the way up here at nearly $3 and came down all the way to $1.50 or thereabouts. So, taking it from that price spike, the price is actually halved. I think a 50% pullback is, more than enough for us to sort of have an expectation that this mining company has put its cyclical low behind it, even though gold and silver may not have done. Particularly silver may still have its intermediate cycle low ahead of it, but it's quite probable that this stock has seen its cyclical low. If it hasn't, if it was to turn down, you would extend the flag out a little bit, and you would use this black line as the support line, and you'd be watching this indicator sort of bobbling along around the bottom here in this white zone, in the expectation that it's going to turn upwards, sometime pretty soon, because, as I say, we are in a gold and silver bull market. So the surprise will come to the upside. Price may decline a little bit further, but the upside potential is really much, much more than the downside risk. The downside risk, bear in mind that we're at $1.78 at the moment. I've been talking dollars all this time. I should have been talking. Shows how much I'm used to talking in dollars with my mining companies. These are all in pence, of course, pounds and pence. So this is 1.785 pennies. So what we've got, I feel really stupid now, so I'll have to put a comment on when I post this to say ignore my stupidity. So the downside risk is down to 1.5 pence, roughly speaking, but the upside potential is way up here at around about 5 pence. So risk reward is heavily weighted towards the reward side. So anywhere in this zone, or in fact anywhere in this flag, is where you should be buying this stock and where you should be accumulating this stock. Anywhere down near the support line on this flag. So when price touches the support line, and we have the sense that we're near to the end of the correction, that's really when you should be sort of accumulating and buying the stock. And I'd suggest that is any time from basically any time in November, as prices sort of retraced down below 175 and has come a little bit further down. You don't really want to worry too much about catching the exact bottom. It's very, very hard to do that. All you need to know is that you're accumulating in this area here prior to the stock breaking out and going all the way up here. So you want to be getting your ticket on this train down here and riding it to the station up here. So despite my my mistake there in calling it dollars or whatever I was calling it, dollars, cents. Getting my units wrong. Try not to worry about that. Everything else that I said was right. So I'll leave it there for now, and I'll do another sort of chart analysis for you in a little while, if people think that this has been helpful. Thanks a lot for listening. Thanks a lot for watching, and see you again soon.